Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. I'm so excited, grateful, and thankful for life and for being with you here this morning. It's a new week. Happy New Week, everyone, and trust you all had a wonderful weekend out there. Before we kickstart the session, let's confirm that we are good to go this morning. So, I would like to see some feedbacks. If you can see my screen and you can hear my voice clearly, please let me know in the comment section by just typing hi in the comment section, and this will give me a positive feedback that we are good to go this morning. So let's see what we have here in the comment section, how we are pumped up and ready for another session, which promises to be insightful. Okay, let's see what we have here. Do I have people in the house? All right, so I think I have a bunch of comments here. I can see 31227 9258 6229. Good morning to you all. 697, good morning. 697 says the room is dead. Well, we are back alive right now and trust you are live with us. Okay, 31530, good morning. 683, thank you. 799, Susie MB, how are you doing? 9125, hey Carrie, good morning to you and thank you very much for being around. All right. 9125 says good afternoon. Okay. All right. I think with this bunch of comments, I think we have a positive feedback that we are good to go this morning. So it's on this note I welcome you all to yet another promising session on the Extra and Speed Life. My name is Sharif Daramola, and for the next 1 hour, I'm going to be your host where I will be taking you through a trading journey into the financial market where we are going to be looking out for sniffing out trading opportunities from the current market structure. Personally, I've conducted a comprehensive price action based technical analysis on a handful of financial assets, which I will love to share with you this morning. But if you do have any financial asset, today being the first day of the week, this is a very good opportunity for you. If you have any assets you want us to look at for the week, and trust me, I will try as much as possible to include it into our plans for today. And of course, once we include it, it's going to be part of the instruments that we are going to be monitoring throughout the course of the week. So if you have any, be it cryptocurrency, options, currency pairs, commodity, whatever, what have you, let me have them in the comment section and I will include it into our plans for today. Now, for those who are joining us for the first time, you might be asking that what is really going on here? What are we doing? Well, we gather here as a community in anticipation of the New York session, and this is on a daily basis as we go into the markets to strategically position ourselves ahead of the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, where we come together to dissect the market and position ourselves to catch any potential opportunity ahead of the New York session. So you're highly welcome on board. And one thing I will say here is that the more time you spend with us, the easier it becomes for you to understand how this works, which will eventually give you the confidence to use the information you have gathered here to make your independent trading decision. So, with that being said, let's dive right into the business for today. And as usual, the first thing we normally do is to check on the economic calendar. And if you had been with us for a while now, you all know how important this is, as we know that these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, hereby giving us the leverage to position ourselves in such a way that we can capitalize on any potential trading opportunity prior, during, and even after the event. So on the economic calendar today, we do not have any high impact event coming from the economic dockets that affects the assets on my own watch list for today. The US economy, the Japanese economy, and of course the United Kingdom's economy. But since today is the first trading day of the week, we do want to have something to look at to gauge how we can position ourselves and see why the price action is behaving the way it's behaving during the first hours of the week. So what I did here was to include medium impact event, which will also be taken into consideration to help us gauge what is likely going to be happening today, and also put us all on the same page with majority of the participants in the market. So for today, Monday, August 7, we have a couple of high impact events from each of the economies on our watch list for today. So the first one is coming in about an hour, 15 minutes from now, and that is the Fed's Acker speech. Patrick Acker is the 11th president and chief executive officer of the 3rd District Federal Reserve Bank at Philadelphia. So he's going to be giving a speech in about an hour, 15 minutes from now. So we want to look forward to what he's going to say, as this will give us an insight into the monetary policy of the Federal Reserve and, of course, the health situation of the United States economy. Then we're also going to be seeing Fed Bowman's speech. Fed Bowman she is the governor on Federal Reserve's board, and she's also an American attorney. And we want to look out for what she's going to say too as well. Then in about 6 hours from now, we have something from the United Kingdom economic docket, and that is Peel's speech. Peels is the chief economist and executive director for monetary analysis and research of the Bank of England. So we are going to be looking forward to what he will say, since he's responsible for the analysis that the Bank of England uses to make monetary policy decisions. So whatever he says here will give us an insight into the health situation of the United Kingdom. Then we have the BRC like-for-like retail sales. This is the British Retail Consortium, and it's like retail sales measure changes in the actual value of retail sales from participating companies with invaluable management information on a regular and reliable basis. So a higher reading is considered to be something positive for the pound sterling, while a low reading is considered negative. So we have 4.2% from the previous data. That was for the month of June. So we're looking forward to what the actual data for the month of July will be, though we are yet to have a consensus here. So probably prior to that event, we will be seeing something to gauge and have a deviation to work with. Then later on today, we have something from the Japanese economy, and that is the labor cash earning. And this indicator is released by the Ministry of Health, Labor and Welfare, and it shows the average income before taxes per regular employee, which includes overtime pay and bonuses, but it doesn't take into account earnings from holding financial assets nor capital gains. So a higher reading here is generally seen as something positive for the Japanese yen. And from the previous data we saw for the month of May, it came in at 2.5%. And we have economists projecting a 1.6% for the actual data today, which gives us a sign that economists are seeing a contraction in that regard. So we look forward to what the actual data is going to be like. Then finally, we have the current accounts NSA, which is released by the Ministry of Finance, and it reveals the net flow of current transaction, including goods, services, and interest payments into and out of Japan. So the current account surplus indicates that the flow of capital into Japan exceeds the capital reduction. So a higher reading is considered positive while a low reading is seen as negative. Now, if we look at the previous data, we have a 1,862.4 billion Japanese yen for the month of May, and economists are projecting a 1,395 billion Japanese yen for the month of June. So we are going to be looking forward to what the actual data is going to be like. And of course, as technical traders, what we are going to be doing here is to sniff the current market structure to identify how market participants are anticipating this event, which of course would reflect on the chart in the form of price action, giving us clue of how to position ourselves. So the first asset we are going to be taking on today, of course, as usual, is going to be the US Oil Spot. And in fact, on the US Oil Spot, I personally already have a sell position triggered at this point in time, and in fact I will be sharing with you what led to the idea of selling the US oil, especially during the first half of this week. Before we go into the details here, let's run through my the higher time frame where I was able to spot a pattern which we are going to be using to guide our trading activity for this week. So on the 4 hours time frame, so let's have an holistic view of what is really going on in this market. So what I did here was to take into consideration the nature of price action since the beginning of the month of July. And from what we were able to come up with here, you will see from an holistic point of view that price action has indeed been very, very bullish since the beginning of the month of July in the favor of the OPEC Plus members. Remember, the OPEC Plus members have been trying to artificially increase the global demand of oil, skyrocketing the price, and their target is a benchmark at $80 mark. So as a result of this, they've been cutting oil production, and in fact their meeting last week Thursday even buttresses more oil cut production, as we saw the Saudi Arabia cut oil production by 1 million barrels per day, and we saw the Russians also pledging to cut oil production by 300,000 barrels per day. So these are very, very significant numbers that would likely incite a potential demand in oil prices, which of course will dovetail to more higher numbers in higher prices in the US oil. Then another thing that is not helping matters is the issue with the inflation situation in the US, and of course the Fitch rating, which of course has dropped the US rating to AA++ from AAA, which is not a good signal for the US economy too as well. And if the dollar is dropping, definitely the US oil will rise, because the US oil becomes cheaper because the dollar has dropped, for especially for people who purchase the US oil with the US dollar. So let's go into the technical setup here. So like I said, we have an ascending trend line here after connecting the series of higher lows, giving us buttressing the strength of the buyers in this market. And as long as price action remains above our ascending trend line, we of course want to look out for patterns and structures that will support the idea of buying that asset. Now, with the situation here, price remains above the ascending trend line. Now, coupled with the ascending trend line are a couple of levels which I was able to identify. The first one here is our key level for last week, which is at the $80 mark, which of course is the benchmark the OPEC Plus members are looking at to place oil prices. Then the second level is the $82 mark, which is going to be my yardstick for trading activity for this week. So the $82 mark is our key level for the week. And for those who have been with us in this community for a while, you know how we use our key level. When price drops below the key level, we have no other choice than to look out for patterns and structures that will support the idea of selling. And as you will see right now, price has dropped below the key level. Now, going into the new week, we saw some couple of rejection of the $82.80 area, giving us clue that buyers might have found a wall around that area where sellers are negating any uptrend continuation around this area. Now, to have a better perspective into what is really going on here, we would need to scale down into a much more lower time frame to see how participants in this market had reacted to prices above the $82 level prior to the beginning of this week. And this, of course, will give us an idea on how we are going to be positioning ourselves, at least ahead of the first half of this week. Then before we scale down to the 1 hour time frame, I want to state here that a breakdown of the $82 level could likely see price drop into either the ascending trend line or the $80 mark, where depending on how price action reacts to the zone will give us a clue into what our next line of action will be. But till that happens, let's scale down to the 1 hour time frame to see what is really going on in this market. So at the beginning of this week, this is what I was able to come up with after trying to dissect where price is likely going to be going. Now, the first thing I saw at the beginning of the week was this range. I saw price was trading within the $82.85 level and the $82.20 area to give us an insight into the level of indecision at this point in time. And you know how we do it whenever we have this kind of simple flat channel. We always want to wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, coupled with the fact that we have a range identified, it is quite clear that buyers have been struggling as soon as price got into the $82.85 level, as we saw what happened here on Friday's trading session. And during the early hours of today, we saw the same thing happen around this area, giving us signs that we might likely be seeing a reversal pattern in the form of a double top structure gradually unfold. And with this situation here, you know, whenever we identify a potential reversal pattern, the next thing we want to be doing is to identify the neckline, which we are going to be using to validate that reversal pattern. Of course, we need a breakdown to validate that reversal pattern. And coincidentally, the neckline also shares a confluence with that support line of that flat channel we identified earlier. So a breakdown retest of the structure definitely will welcome selling opportunity. And as a result of this expectation, I had my first sell position triggered. And if you are part of those who took advantage of this opportunity, that's going to be a very big kudos to you, as you will currently be running with about 63 pips in profit at this point in time. Now, with this position triggered at this point, now what is going to be our plans for today, especially for those who had missed out on this opportunity? Well, if you had missed out on this opportunity, there is no cause for alarm. You need to just keep your calm. We are still at the first day of the week, so the week is still very, very early, and there are still chances that the market could still give us more opportunities to capitalize on this bearish move, if that is what is going to happen for the first half of the week. So now with the situation here, how do we participate in this bearish move? That is for those who had missed out on this opportunity. Well, the first thing we need to look at here is the breakdown of these key levels. We have the support line and of course our key level for the week, which is situated at the $82 area. And you all know from a technical standpoint, when price action breaks out significant structures, such as the levels we identified here, there are chances that price could still come back to retest the structure at some point in time, where signs of continued selling pressure, where we see signs that buyers are finding it difficult to climb back above the $82.20 level, then we can look out for more opportunities to sell or add more position to our existing trade. So that is one perspective to which we are going to be using to position ourselves ahead of the New York session. Now, the second question here is, what happens if price does not go back to retest that zone and instead it continues to drop to the downside? Well, if you look at the structure closely and going to as far back as last week Thursday, you will see that we have a structure we can also use to capitalize on that move, and that falls along the $81.50. Is it 50 cent or 55 cent level? Let's see. I think the 50 cent level. So I would like to give this a blue color to differentiate it from the previous levels we have here. So we have the $81.52 level. So we want to be marking these levels out on our chart, as we are going to be using it to guide our trading activity if price does not break down, come back to the zones we identified earlier. So with the situation we have here right now, we have another level at the $81.52 level. So if price does not climb back into that zone to incite a sell-off, then we could probably see a trend continuation pattern around here, where the breakdown of the $81.52 level retest of structure will welcome more opportunities to sell the US oil spot for today. So we do want to be marking out these levels, and let's see how the market will react to that structure to determine what our next line of action will be. Now, there is a caveat to the setup. You know how we do it in this community. We also want to keep tabs with the potentials of buyers too as well. Now, with this situation, it's quite obvious that price action has been bullish in the last 4, 5, 6 weeks. And in fact, last week we saw a very strong bullish momentum, which we, of course, took advantage of. Now, if we look at this level at the $81.52 level, and the $81.20 area, we can see that we noticed some buy pressure around this area on Friday. We saw the same thing happen here around this area, giving us clues that this level could serve as an accumulation phase to incite an uptrend continuation. So as a result of this, we want to take note of this area. So we have this $81.25 level, which could turn out to be an accumulation zone. So we need to be very wary of what happens around here, as we could see buy pressure resume to incite an uptrend continuation. So let's be mindful, and not until a significant breakdown of the structure happens that a strong bearish move is going to be and a trade will feel comfortable in. So for this moment, for those who have a sell position triggered, ensure you move your stop loss to your entry zone. Let's see how the market will play out from this current structure. So if I'm going to be considering buying here, if price action comes into this area and we begin to see buy pressure persist and sellers find it difficult to break through the $81.25 level, we might be getting ready to be part of a bullish trend to the upside, where a further breakout of the $82 level will welcome more opportunities, and a further breakout of the $82.85 level will further confirm that this bullish momentum is going to be dictating the pace, at least for the first half of this week. So this is how we are going to be managing our positions on the US oil spot for today. So our center of focus is basically along these levels we identified on the chart. So you do want to be marking out that level, as you will be needing them as a reference point to guide your trading activities for today. So if you have any questions whatsoever as regards to my explanation, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next asset. All right, everyone. So, in the absence of no questions, I want to take this as a confirmation that my explanations are well clear and that we can move on to the next financial asset. So, the next instrument on our watch list for today is the USTech100. Another phenomenal positions we had on the USTech100 last week, as we took advantage of some interesting sell positions, which we of course capitalized on as we had multiple entries to scoop in significant amounts of profit during the course of last week's trading session. And for those who are part of that profitable journey, well done to you guys for being on standby to catch that move. Now, with a new fresh perspective into this current market structure, I was able to identify some simple setups. So in that regard, let's first scale up into the higher time frame, where I want to be sharing with you what I was able to come up with on this chart while trying to dissect what to look out for today and for this week, of course. So the first thing I did here was to try to refresh my memories on what is going on from the higher time frame. And to start with, I went to the daily time frame, where you will see that it's quite obvious that price action has been bullish since the beginning of this year. And if you take it a step further to connect the series of higher lows here, you will see we have a beautiful ascending trend line which has been supporting that bullish momentum. Now, with the situation we have here, it is quite clear that we had a deviation from that ascending trend line that was on in the month of April, as we saw a new deviation to the upside, as you will see with that green line on your screen. And in fact, if we zoom into the current structure, you will see that that trend line has been broken to the downside for the first time in the last 3 months, which is a clear sign that we could probably be getting ready for a sell-off. As you all know, from a psychological perspective, majority of the key players in the market who had bought the USTech100 at a very cheap price, let's say for instance around the 13,500, will at some point want to be doing some profit taking activities, which would reflect on the chart as a retracement, probably into that ascending trend line we identified earlier, in anticipation of another uptrend continuation, or it could break down, retest to incite a sell-off. So with this perspective in mind, what is going to be our expectations for this week? Now, if you look at the structure closely and taking into consideration what has been going on in this market in the last couple of weeks, you will see that it is quite clear that that area around the 15,950 has been a significant barrier for buyers in this market. As you will see, every attempt by buyers to break out of the structure has been met with strong resistance from the sellers, further indicating how strong the sellers are around that area. And from a technical standpoint, this whole structure we have here, it appears to gradually transition into what looks like a double top structure, which from a technical standpoint is a strong reversal pattern. And you know, when we have a double top structure or any reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, where the breakdown or breakout of the neckline will be the signal we are looking for to validate that reversal pattern. And of course, in that regard, we have the 15,400 marked out, as we would need price to break down the structure to confirm that truly we have a reversal pattern. Now, with the look of things here, at least in the last 4 days now, we saw the breakdown of that ascending trend line here. And in fact, we've seen the breakdown of the 15,400, which happens to be the potential neckline of this potential reversal pattern we identified here. So how are we going to be witnessing a reversal pattern this week? So that simply means that we have the neckline area as our key level for this week. So as long as price remains below this key level, we have no business buying the USTech100. So if price remains, then we are going to be looking out for ways to capitalize on that bearish move to see price into that ascending trend line we identified earlier, dovetailing to about 450 pips to catch there if price moves in that direction. So how are we going to be capitalizing on this move if price still remains below the key level at the 15,400? So in order to do this, we would need to scale down into the lower time frame, that is the 1 hour time frame, to see how participants in this market has been reacting to that key level at the 15,400. So to do that, I will be scaling down into the 1 hour time frame, where we want to see how participants has been reacting to this zone. So right back to the 1 hour time frame. So this is our key level, and the first thing you can see here is price is trading below our key level. And when price trades below the key level, we have no other choice than to look out for patterns and structures that will support a downtrend continuation. Now, if we take into consideration the impulsive move that started last week, we can see this might turn out to be a retracement of that impulsive move to incite a trend continuation to the downside. And if you look at what has been going on since the early hours of this week, it is quite obvious that the week has started on a very strong bullish note. As you see, price started at around the 15,285 and it has climbed and in fact broken out of that resistance line at the 15,360 to incite a potential uptrend continuation. So with the higher lows identified here, the next thing we do, of course, is to connect the series of higher lows, which we are going to be using as a trend line to guide our trading activities for today. So we want to capture the pivot lows here. So we have something like this to work with. So with this situation here, if price remains above that ascending trend line, we might likely be seeing price break out of the key level at the 15,400 to incite an uptrend continuation. So that is how we are going to be looking out for buying opportunity. So we can position ourselves above the 15,360 and the 15,400. As long as price remains above that ascending trend line, then we hold on to a bullish bias. But if price action breaks down this ascending trend line, followed by a retest of structure, then we're going to be getting ready to sell, which also suits the reversal pattern we identified on the higher time frame. Then a further breakdown of the 15,285 will welcome more selling opportunities, and of course we want to see if the market will go as far as 450 pips move as we projected on the higher time frame. So this is what we are going to be using to guide our trading activity for the USTech100, at least for the first half of this week. So you do want to be marking out those levels on your chart, as you will be needing them as a reference point to guide the trading activity for this week. So let's see how this will play out going forward. And then I was able to cite a level that we can use to guide our selling opportunities in this market, which falls around the 15,325 level. So I want to mark this with a different color to emphasize its importance. So this is what we are going to be using to guide the selling opportunities here. So if price breaks down and retests this level, then we want to be getting ready to sell. And you see how it also shares a confluence with that ascending trend line that we have here. So a breakdown retest will welcome the fail sell position. Then a further breakdown of the 15,285 will welcome more selling opportunities. So mark these levels out on your chart and let's see how the market will be reacting to this current market structure. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset on our watch list. So I see a bunch of comments, comment complimentaries, I think. I see 8608, good afternoon. Valeria, good afternoon to you. Glad to have you around and thanks for checking in on us all here. Oredo, good afternoon to you. Hello, JR Lauda. And I see your comment 6506 AA. I don't know what you mean by that, but let's see. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving on to the next financial asset on our watch list for today. So the next instrument on our watch list for today is, of course, the GBPUSD, and the market is still looking as if it's in a limbo at this point in time, as we are yet to make a decision for this week. So I will be taking you through what I saw on the higher time frame that led into this current setup you are seeing on your chart. So with that being said, let's dive right into the higher time frame. And to start with, we are going to be taking a quick look at the daily time frame, where you will notice that since the second quarter of this year, price action has been very, very bullish in this GBP/USD market. And of course, from a fundamental aspect, I think I deliberated on this during last week's trading session, where I made mention that one of the reasons why the pound sterling has been growing significantly well against the US dollar is simply because of the high yield in return when you invest on the pound sterling. Remember, currently, the Bank of England last week increased the interest rate by 25 basis points, which is the highest the industry has seen in the last 20, 30 years, I don't know. And as a result of this high interest rate compared to that of the dollar, which is at 4.755%, so the variance enough is an attractive window for investors to place their bet on the pound sterling, as if you have your funds in pound sterling at this point, you have a higher real yield in return. And as a result of this, we have been seeing how the pound sterling has continued to find higher highs and higher lows in this market. Now, when we look at things from a technical standpoint, at least since the month of March, connecting the series of higher lows, here we have a beautiful ascending trend line, which of course we are going to be using to guide our trading activity for this week. And of course, it has been supporting that bullish momentum so far. Now, if we zoom into the current structure here, you will see a very interesting scenario going on at this point in time. Now, you will see that since price action tested the new peak at the 1.31450 level right here, we saw price drop back into the ascending trend line. And as soon as price got into the structure, you will notice that in the last 4 days, price action has been finding buy pressure around that area, giving us signs that we might likely be seeing a bullish momentum. Likely, please note my word right there. And one thing for sure, to help us guide our trading activity, we need a key level. And I was able to spot something at the 1.2700 area, which is going to be the yardstick we are going to be using to guide our trading activity for this week. And you know how we use our key level in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. But if price drops below the key level, then we want to be looking out for patterns and structure that will support the idea of selling. Now, if you look at since price action has come back into the structure, we have been noticing buy pressure, giving us signs that buyers might likely be respecting that bullish trend line one more time to incite an uptrend continuation. And if we consider the fundamental picture too as well, a moderate hike on the pound sterling is a good attractive window for investors to come and put their funds on the pound sterling. Now, another thing about the structure is how important it is. Now, if you look at this closely, you will see that it shares a confluence with both the ascending trend line and that key level we have here, and of course a demand zone identified around the 1.265 area is another significant factor to drive a bullish bias in this particular market. So as long as price remains above our key level and of course the ascending trend line, we have no business considering selling the GBPUSD at this point. So what we are going to be looking out for here is patterns that will support the idea of buying the GBPUSD. And the only condition that will make us consider selling the GBPUSD is for us to see price action slice through both the ascending trend line, the 1.27, and of course that demand zone had a 1.265 to join a bearish move. So a breakdown retest will be what we are looking out for to sell the GBPUSD. But at this point in time, things are still looking very bullish. Price still remains above our key level, above the demand zone, and of course above the ascending trend line. So let's scale down into the 1 hour time frame where we want to see how participant in the market has been reacting to this crucial confluence to decide what our next line of action will be. So with the information we have gathered here, when we scale down to the 1 hour time frame, things will become a little bit more clearer. So back into the 1 hour time frame. So this is what I was able to spot this morning after when I was trying to dissect where price action is likely going to be going for today. So let me readjust this key level. So the key level is 1.27. Price still remains above the key level. So things are looking very bullish at this point. So the first thing I was able to observe on this chart is these higher lows since last week Thursday. We saw the lowest point here. We saw a higher low here on Friday, sharing a confluence with that as key level had the 1.27. And you can see what we have right here. We have been noticing some buy pressure around that area multiple times, giving us clues that we might likely be seeing an uptrend continuation. So with the higher lows here, I was able to connect them to give us this ascending trend line, which of course is going to be a major determinant of how we are going to be positioning ourselves for the GBPUSD. And as long as price remains above this ascending trend line, we have no business selling the GBPUSD. Now, in addition to this trend line is this range where you will see price has been confined within the 1.2764 and the 1.27150 since the beginning of this week, which further emphasizes the level of indecision at this point in time. And you know how we do it whenever we have a flat channel like this. We of course want to remain patient as price action still oscillates within that range, waiting for a signal which might come in the form of either a breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistance line of that range to give us an opportunity to buy. And from the way things are looking right now, things are looking very bullish. We have a couple of parameters that's guiding that idea. The first one is price remains above our key level. Secondly, price remains above this newly identified ascending trend line. And thirdly, we have been noticing buy pressure around the 1.27150, as we can see that sellers are finding it difficult to break through that structure. Now, if this structure holds, that is, sellers continue to find it difficult to break down both the 1.27150 and the ascending trend line, then we would have no other choice than to get ready to buy the GBPUSD. Now, if we look at this closely, look at this impulsive move that brought price into this area, we can see that price action appears to be transitioning into what looks like a double bottom structure, which is yet to be confirmed at this point in time. Now, if price finds it difficult to break through, then we could likely have a reversal pattern. And you know that whenever we identify a potential reversal pattern like this, the next thing we want to be doing is to identify a neckline, which of course we are going to be using to validate the reversal pattern if price breaks through the neckline. So to find a neckline here, you will see we have something at around the 1.27450 level, which we of course want to be marking out right now. Is it 1.26750? I think 1.2627. Hold on a second. 27435. So you want to be marking this level right now, 27435. Mark that level out on your chart, as we will be needing it to guide our trading activity for today. Now, look at this structure closely. It has been a major determinant of price action since last week, Friday. We saw the selling pressure around here. We saw the break held around this area. We saw a couple of buying pressure around the structure during the early hours of today before price action did break down the structure. Now we saw something like this here. Now what we are going to be doing now is to wait and see if the market will break out the 1.27435 to welcome an opportunity to buy the GBPUSD. So anywhere above the 1.27435 will be what we are looking out for to capitalize on the bullish momentum here. So we are looking forward to breakout retest, then a further breakout of the 1.27640 will welcome more opportunities in this market. So that is how we are going to be capitalizing on a bullish momentum from this current market structure. So we have two levels here to capitalize on bullish momentum. We have the 1.27435 and of course we have the 1.27640. Now with that figured out here, remember, you know how we do it in this community. Even though we are looking out for bullish momentum here, we cannot ignore the potentials the sellers may have around this area. Now, I told you earlier that we are not going to be considering selling unless both the ascending trend line and the 1.27150 is broken to the downside, and you can afford to remain patient to wait for retest of structure for confirmations before joining any bearish move. Now remember, your stop loss should be in place, very, very important. So if we are selling, stop losses should be right above the 1.27435. Anywhere above that area seems most appropriate. And if we are buying above the 1.27435, ensure you have your stop losses right below the ascending trend line, which will dovetail to between 30 pips to about 35 pips on that one. So let's see how the market will play out on this current market structure. So you want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the last instrument on our watch list. In fact, I'm already running out of time, but I will try to round off with one more financial asset. So let's see if we have any questions. So I see a comment here from 4499301. So he or she, I don't know, is asking if we recommend to sell if it keeps growing according to the line we set. First of all, I don't know which asset you are talking about. Please always try to include the asset you are talking about in your comments so that I can easily refer to them quickly. So I don't know what you're talking about at this point in time. If you're still around, please try to refresh your statement by including the assets you are talking about so that we can all be on the same page together, okay? So I look forward to your comments at 9930111 on that one. I saw 4943. I see your comments. I see your comment 603. Good morning to you. Okay, the one we are viewing currently, okay, that's the GBPUSD. Okay, so recommend to sell if it keeps growing according to the line we set. Now, please listen attentively on this one. So we are not going to be selling. Remember, let me run through that chart one more time. So look at this chart quickly. You will see that we have a bunch of parameters here that we said we are going to be using to guide our trading activity for today. And one of them, which is the very important one, is the ascending trend line we identified here on the 1 hour time frame. Now, if we are going to be selling the JPUSD today, we will need price action to slice through that ascending trend line. And one interesting thing about the ascending trend line is the fact that it also shares a confluence with the 1.27150, which happens to be the support line for this week. That's the lowest point price action has been for this week. Now, if price breaks down both the ascending trend line and the 1.27150, then we can afford to sell the GBPUSD. Now, a couple of retests will do us a lot of good to confirm that truly sellers are getting stronger at this point in time to join the bearish move. And a further breakdown of the key level would be a good opportunity to add one more position to our existing trade. And I told you, very important, have your stop loss in place, very important, above the 1.27435, which will dovetail to between 30 to 35 pips on that one. So that is the only condition we're going to see here that will make us want to sell the GBPUSD. Now, the other scenario I stated here is that as long as price remains above the ascending trend line, we have no business selling. So we continue to look out for buying opportunity. And to buttress this, we saw we saw price action appear to be gradually transitioning into what might look like a reversal pattern as we have multiple rejection of this zone right here. So in that regard, we had a neckline situated at the 1.27435, where I said a breakout retest of that line will welcome buying opportunities in this market. Then we can capitalize on more buying opportunities if price action goes on to further break out of the 1.27640 level. So that is how we are going to be capitalizing on trading opportunities on the GBP USD for today. I hope I made myself clear. 4499311. If I didn't, please let me know where it's not clear, and I will be willing to be of help in that regard. So I see your comment 39346012, calling from Nepal. Namaste to you. How are you doing today? Okay, so 4493011 just confirmed that is quite okay. So I wish you best of luck on that one. So with that being said here, let's dive right into the last instrument on our watch list for today. So the next instrument on our watch list is the XAUUSD, my favorite, popularly known as the gold spot. So on the XAUUSD, we've seen quite an interesting bearish trend since the beginning of this week. So I will be going into the details on that one in a moment. But before we do, let's run through the higher time frame to see what things are looking like from an holistic perspective, and then let's see how we can correlate the structures we have on the higher time frame with what we have on the lower time frame to identify a potential trading setup for us today. So the first thing we are going to be doing here is to scale up into the higher time frame, that is the daily time frame. And on the daily time frame, it is quite obvious that price action has been very, very bullish since the last quarter of last year, I think September, October to be precise. And to further emphasize the strength of the buyers in this market, I was able to connect the series of higher lows here to give us an ascending trend line to work with for this week. And of course, this trend line has been supporting that bullish momentum. Now, zooming into what has been going on here in the last couple of months, we saw our price action tested a new high at the $2,000.78 area, and since that moment we saw our price significantly drop to the downside, finding lower lows and lower highs. And since the month of May, price action has been caught within a range between the 1,980 and the 1,900 to further emphasize the level of indecision in this particular market. Now, coupled with this range that we have here is a potential reversal pattern gradually unfolding here. So I'm beginning to see something that looks like an inverse head and shoulder following that impulsive move to the downside. So we have the left shoulder, we have the head right here, and it appears the right shoulder is still going through a transformation phase where I'm still looking forward to price comeback into the 1,980, which will be serving as the neckline of this potential reversal pattern. So of course, a breakout of the 1,980 will be validating this reversal pattern. And if price does not break out of the neckline, then definitely we're still going to be holding on to a bearish potential, since price has been bearish since the month of May. Now, let me hide this one right here. Now, in order to help us guide our trading activity for this week, I was able to identify a key level which we are going to be using to as a yardstick to guide trading activity, and that falls around the 1,930 level. Now, if we go to as far back as the beginning of this year, that is January, we saw how the 1,930 had played a major role in determining where price action will go when price gets into that zone. Now, look at what happened here in the months of January stroke February. We saw how that zone became a key player for sellers to push price to the downside. And not until in the month of March, we witnessed a breakout of that structure. And in fact, since that time, sellers has been struggling to drop below that area. Look at what happened here in the month of May, buy pressure. In the month of June, we had buy pressure, though we had a breakdown of the structure here in the month of June, stroke the early week of July, but price has since then climbed back above that level. And one interesting thing ahead of the new week is that price action is back into that level one more time. Now, with the situation we have here, you will agree with me that we are at a crucial moment in this market where price action is around the key level and of course the ascending trend line we identified earlier. Now, the question at this juncture in the market is, will price respect the ascending trend line as we begin to notice buy pressure here to incite an uptrend continuation, where the breakout of the 1,980 will confirm this reversal pattern to incite another wave of bullish momentum. So that is one scenario to this. However, if price drops below the 1,930, which would have also broken down that ascending trend line, then we are going to be looking out for patterns and structures that will support the idea of selling. Now, with the situation we have here, we need to scale down to a much more lower time frame where we want to see how participants in this market is currently reacting to that crucial confluence we just identified, and that's the 1930 and of course the ascending trend line. So in that regard, we will need to scale down to a much more lower time frame like the 1 hour time frame where we'll begin to see things clearly. So right here on the 1 hour time frame, this was what I was able to come up with while trying to dissect the current market structure. Now, for those who have been with us on the XAUUSD since last week, for instance, remember that throughout the second half of last week, we noticed how it became difficult for sellers. Last week was characterized with a lot of selling pressure. But as soon as price got into that 1930, we saw how sellers struggled to maintain that momentum. As we saw at every point in time, buyers negated all attempt by the sellers to break through that structure. And on the final day of last week, that was on Friday, following the NFP data that came in below expectation, we saw this sharp rejection leading into an engulfing bullish candle that sliced through the 1938 level, which could be considered to be the neckline of that reversal pattern we identify here. So let me show you what I mean by reversal pattern here. So if we consider the impulsive bearish move right here, you will see how this level, this zone, had become a strong negation of selling pressure, giving us something like a reversal pattern. And when price breaks out of this neckline, this will likely be an opportunity to join an uptrend continuation. Now look at what we have here. On Friday, we saw a sharp rejection of the 1946. Let me delete this one so that we can have a clean chart. Then during the early hours of today, we saw another sharp rejection, giving us clue that sellers are building up a momentum around this area. Now the question is, will this momentum hold, or are we going to be seeing this as a shakeout for the buyers? Now with this situation here, while trying to further dissect, the first thing I noticed was that since the early hours of today, price action was initially trapped within this range at the 1946.50 and the 1941 area, giving us an insight into the level of indecision at the beginning of the week. And whenever we identify such a range like that, we want to wait patiently for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And fortunately for the sellers here, we had a breakdown retest of the $1,941 level of that support line to incite a bearish momentum. Personally, I missed out on this opportunity as this was during the Asian session and I was fast asleep during that time in this part of the world. But for those who took advantage of that opportunity, well done to you for being on standby, as you will currently be running with over 60 pips in profit at this point in time. And at this juncture, you would need to move all stop losses to secure that position. Now, for those who had missed out on that sell opportunity like me, we would need to remain very patient here to wait for new structures to mature before we want to be jumping into any position. Now, if we take into consideration the breakdown of the support line here, from a technical standpoint, when price breaks down a key structure such as this one, we expect that some point in time, price is likely going to come back, retest that structure to incite a downtrend continuation. So for those who had missed out on the breakdown of the structure, let's see if the market will come back to retest the structure. If it does, then continued selling pressure around that area will give us an opportunity to join or add more position depending on if you already had a position running. Then a further breakdown of the 1930, which is our key level for this week, will definitely welcome more selling opportunity. In fact, I would need price to break down the 1930 to really be comfortable with this sell position, because as long as price still remains above our key level, the chances that buyers could still take over is still very, very evident in this particular market. Now, to make things a little bit more easy for us to capitalize on any potential opportunities here, I was able to identify a simple setup on the 15 minutes time frame, which we shall be using to guide trading activities ahead of the New York session today. So this was what I was able to come up with on the 15 minutes time frame. So let me zoom things out a little bit so you can see things clearly at this point. So the first thing we can see here on the 50 minutes time frame, at least since the early hours of today, is the fact that price action has been bearish. And when we connect the series of lower highs, we have a descending trend line to work with on the 15 minutes time frame. Now, as long as price action remains below this descending trend line, we have no business buying the XAUUSD. And coupled with the descending trend line are a couple of key levels at the 1936.50 and the 1934.50 level, as you can see here. Now, I'm beginning to think that buyers are gradually gaining momentum here, despite price still remaining below the bearish trend line. Now, the reason why I have said this is this. Look at the structure here. So the last time price touched the ascending trend line was this area. We saw a little breakout of the ascending trend line. Price dropped into this area. And in fact, in the last 1.5 hours, we have noticed, despite the breakdown of the $1,934.50 level, we have been noticing some buy pressure around that area, giving us clues that we might likely be seeing a breakout of this descending trend line anytime soon. And if we are going to be seeing a breakout, then we shall be getting ready to buy, as the breakout of that descending trend line will be a clear sign that that trend line may no longer have the capacity to continue to negate that bullish momentum. So at this point in time, I want to be seeing something like this to buy. So I want to see a breakout of the descending trend line happen first of all, retest of structure which appears to have happened, and if continued buy pressure, if price still remains above the $1,934.50 level, we'll look out for buying opportunity, and a further breakout of the $1,936.50 level will welcome more opportunities to buy the US or XAUUSD. Now, I'm going to reposition my selling opportunities to stay below the $1,933.50 level, as that is the lowest point price action has been for this week. And you can see what we have here. We have been noticing some buy pressure around that area. So we would need that level to be breached. That is, price should take out all the buy positions here to give us confirmations of joining a downtrend continuation. So to sell the XAUUSD at this juncture, we would need price action to break down the $1,933.50 level, which of course is below that descending trend line, and a good environment for us to join a bearish move. And ensure you have your stop losses in place, very important, above the previous high, which will be dovetailing to about 20 to 25 pips stop loss on that one. So let me mark this level out. So we have the $1,933.50 level, which you want to be using to capitalize on a bearish momentum in this particular market. So these are my views here on the XAUUSD. So to guide the XAUUSD trade, we have a simple setup on the 50 minutes time frame, which of course you want to be marking out on your chart, as you will be needing it as a reference point to guide your trading activity for today. So if you have any questions whatsoever as regards to the scoring setup, feel free to let me know in the comment section, or you need me to do some clarification in an aspect of what I discussed so far, please let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So it has been a wonderful moment with you guys. I really appreciate every single moment I shared with you today. And let's see how the market will play out in the next 24 hours. Of course, we shall be back tomorrow again to review how well this asset has been doing as we get ready for tomorrow's trading session. So for those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed today. But trust me, the more time you spend with us, the better it becomes for you to use the information you have gathered here to eventually make your independent trading decisions on your account. So once again, you are welcome on board. So I'm very confident that we are well equipped ahead of the New York session, as we were able to treat four financial assets today. We talked about the US All Spot, we talked about the USTech 100, popularly known as the NASDAQ, and we talked about the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And we were able to identify very simple setups that we are going to be using to guide our trading activity for today. So I just implore us to remain very, very patient and wait for structures to mature before we jump into any positions, and ensure you have your risk management strategy in place to ensure that you don't risk too much of your portfolio on every single move that you want to make in the market today. And once you have price move significantly well in your favor, remember what we always say here: we move our stop losses to secure the position, so that whenever price action moves in the opposite direction, we are going to be taking out at a worst case scenario break even, and depending on where you placed your stop losses. So on this note, I wish you all the best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this financial assets has been doing, and at the same time strategically position ourselves ahead of tomorrow's trading session. Do have a wonderful evening, everyone. Bye bye.